and then there was a banker sell on oil down into this bottom edge on a macro scale. Now that's obviously on a 30-second chart that banker trade comes out to play there. But there would have been a buy trade in oil. There would have been a sell trade in oil. You overlay that with volume and see if the volume punched, and the big volume didn't punch. Well, the big volume punched here and the big volume punched here. So these are two valid trade opportunities. And obviously, based on those two valid trade opportunities, I could have bought oil there. And obviously 45 seconds later, I'm selling it. So that gives you an idea about the speed of moves that you've got to try and trade. And then 45 seconds later, I've just sold it at a break of 97s, and I've just made a profit of 25 ticks. And that's on a 15-second chart. So you can understand that there might well be another sell starting to set up to top edges here. You can see there's a little bit of a valued narrative for a sell in this candle here. And you could have taken another pop at the same sell, back above 97 again, and you could have popped into a quick sell into that break higher just in the last 15 seconds or so. And obviously you've seen it moving down nicely. You've already got your stops to break even, and that could be you and again into another trade. Now, that's on a 15-second chart. Now, obviously, if that's way too fast and you're going to trade way too often and it just doesn't, you just need time to collect your thoughts. Well, of course, you could always do this on a 15-minute chart. Look for the banker bets on a 15-minute chart and try and focus in on those areas. So you can see some possible banker bets starting to appear on the 15-minute chart. So, for example, there was a possible banker bet down here. You can see possible, but not quite what you're looking for. You can see that there was that one. There was a possible banker bet starting to show up just here, but it's in the wrong side of the market. So you're trying to obviously find it on the right side of the markets. The banker bet that was probably the most obvious on the right side of the markets would have been this one here at 10 o'clock. You can see that this is going down into the prior swing lows. This is going up, that's going up. That's a banker bet there. So you could have taken a sell trade on oil there on a 15-minute chart. And obviously on a 15-minute chart, 15 minutes later, you've just went from 25 down to a low price eventually of about 75, and you've made $500 on a one trade basis, one single trade. So you can see, depending upon what storyline you're trying to trade with, I could take this from the 15 minutes to the 30-minute charts and try and find banker bets on the 30-minute charts. And do you all see where the banker trade was? There's basically been two. You see that on a half-hour basis? Does everybody see that there's basically been two banker trades? There's actually been more than two, but there's two that stand out. Bearing in mind the banker trade is these two lines here. So they've got to be in opposite directions. So on a half-hour basis, the first banker trade was there, yes or no? Is that the only banker trade that's on that phase? Yes, it is. It's into a high price, and it's red over blue. If the red was rising, it'd be absolutely guaranteed that it was a banker bet. Into the bottom edges, this is not a banker trade here because the two lines are dropping. This isn't a banker line here, but you could obviously try and get some business there, but it's not a banker trade. You might be saying, but the red rising and the purple's dropping. Yeah, but the red's dropped with this big aggressive drop here, so that's not a banker trade. This is not a banker trade. This is not a banker trade. This is not a banker trade, but this is a banker trade here, isn't it? So this is a banker trade. This is a banker sell on a half-hour chart. So what else is there? Well, this isn't one here. This isn't one here. This isn't one here. But this is a banker trade potentially here, isn't it? The purple line is still leading this narrative here, and we get a drop off in the red. So this is a possible add-in pullback sell trade. So when we see those trades there, we start to recognize that even on a half-hour chart, I would have bought oil here, sold oil here, and sold oil here. That's all there has been. That's it. That's all there has been. So when we look at those trades and you look at whether we would have made any money on those trades, you can see we would have bought oil here. That was at $96.80. It rallied to a high price of $98.30. That's a $1,700 profit on one trade. And then we would have sold oil at $98.30. We would add into a sell trade at $97.30. And obviously on a macro scale basis, we've just traded a low price at $96.30. So we've just went for another $2,000 sell-off in the last 1, 2, 3 hours on the banker trade basis. So you can start to recognize that, according to whatever time frame you're trying to trade, these are all possible trades. Now, again, we can obviously ask the question about the big surges in volume. Did we get a big surge in volume there? Yes, we did. Did we get a big surge in volume there? Yes, we did. Did we get a surge in volume there? Yes, we did. So we answered the volume question on all of those examples. And that gives us an idea that there is activity inside that banker trade narrative that I want to try and take advantage of. Now, when you drill down into that chart, of course, I could come off the half hour and go into the hours, or come off the half hour and go into the 5 minutes, sorry, or go into the 1 minutes. And I could start fine-tuning that down to the exact point when that trade took place. So this is obviously between 9 o'clock and 9:30 in here. So when I go down into a 5-minute chart, between 9 o'clock and 9:30, I want to find that buy trade on oil. So I go into a 5-minute chart, and between 9:30 and 9 o'clock and 9:30, I want to find that buy trade on oil, and I start looking. Now there's a challenge in here on the 5-minute chart because the red line's going up really, really fast. But the purple line's going up as well. Not as fast, but it is going up. So you'd have to take that all the way down to the 1-minute chart to try and find that trade at 9 o'clock, wouldn't you? You'd have to try and go even further to find that at 9 o'clock this morning, and try and find where the blue line and the purple line and the red line diverge. And you can see quite clearly where they diverge. They could diverge here and here, don't they? So there's your actual trade there. There's your actual trade right there, isn't it? That's where your buy trade is. And when you see that buy trade, you suddenly realize, wait a second, I've basically bottom ticked the whole oil market over those two candles. And when you look at what happened to that oil trade, and you think back, when you look at that oil trade, you go, my goodness, I did actually bottom tick the oil markets. And you managed to swing all the way back off that bottom tick price, back up to these top tick prices. You go, that is genius. But again, because you're on the 30-minute chart, you don't really get into looking for that until it starts showing up in a 30-minute chart. You're not really brought in unless it's showing up on a macro scale basis. But obviously, you're not going to do very many trades. You're not going to do very many trades when you're looking at it from that perspective. You're going to see the occasional trade opportunity, and you're going to start looking at it saying, right, I've got a very, very big opportunity to maybe get involved at some stage. But this becomes your signal line. This becomes your go-to reference chart. And if it's not setting up on this chart, you're simply not trading, right? You can see the red line and the purple line just now against the blue line. Is there an opportunity? Well, there might be, and the next opportunity is again going to be a sell trade on oil. But obviously, if it's going to be a sell trade on oil, and why would it be a sell trade on oil? Because this is dropping and it was rising, but on a macro scale basis, that doesn't look like it's correct. So what are you thinking then? Well, on a macro scale, you'd obviously be wanting this red line to turn up, the purple line to drop, and the blue to keep dropping. And obviously, if it does that, that's going to be a banker buy trade on oil. We're going to find a bottom edge on oil. We're going to start buying up lots of oil. We start seeing the red line outperforming the purple line. And if we see the red line outperforming the purple line and the blue line still dropping beautifully, then of course we just start looking and hunting for the bottom print price. Now, this is why we do this time frame analysis, because obviously it keeps you honest about the big swings. It keeps you in the idea about what the big swing probably will be. We'd already recognized that there is a possible bottom edge in oil because of this ramp up in the red line here. But in the background, that still doesn't feel right to me. It still doesn't feel like we've got the bottom edge of oil. Why? Because the red line is still actually lower than it was before here. And yet the purple line is actually still a little bit higher than it was here before. And as a result, I think there's not enough evidence to me on this longer term chart that we've got the bottom edge of oil. It looks like it, but it doesn't feel like we've got exactly what we need yet to start buying up massive amounts of bottom edge oil. So perhaps $96, perhaps a break back below 96.40 here would give us the macro trade. But again, it comes back to the question that was asked by Catherine about targets and trading. Imagine that's what you're trading. And imagine you came in at 2 o'clock this afternoon to trade that. You wouldn't have had any trades yet. None. Because there hasn't been any real trade setting up. Well, I tell a lie, at 2 o'clock there was a sell trade, but that's different. But you could obviously think to yourself, well, if I'm using a big macro chart, I might not do any trades today. And if that's a problem for me, then of course I've got to adjust the time frame of reference that I'm using. And if I adjust the time frame of reference, I adjust my possible targets. Because obviously a target on a 30-minute chart isn't 5 ticks. A target on a 30-minute chart must be based around the volatility of a 30-minute chart. So a target on a 30-minute chart on oil must be something like $500, 50 ticks, not a 5-tick profit. And that gives us a little bit more of an idea about the idea, how big a target do we use against the volatility we're willing to accept into the marketplace. The bigger the time frame, the more the volatility in the price, of course.